With billions of dollars flowing into Canadian natural gas, with things like new LNG projects coming online, new AI data centers, and a lot of money going towards infrastructure, a lot of investors are looking to buy into the space. And if you go on the internet right now, they will tell you that there are two names you should buy. It's either Tourmaline or it's Peyto. And investors on the internet that are talking about this are very much entrenched into which one they think is best, and they very much do not like the other. So today I'm going to talk about these two. I'm going to compare them, and I'm going to tell you what each of them does best, why you might want to own either of them, and why I personally do own both. And so we do have to start this whole conversation talking about historical performance and what the last couple of years has looked like, the sort of historical strategy here, before we jump into what I think the future is going to look like, where the valuations of each of these companies stands, and obviously if I had $1,000 to throw into one of these stocks, where would I put it right now? Now, the first and foremost, most important thing we do have to cover here is the fact that we're going to be evaluating two companies that have existed for very different periods of time. So every time I show you a time frame here, obviously anybody could cherry pick a time frame to make one stock or the other look much better. For example, we're starting at the 3-year time frame, and there's a very clear winner over the last 3 years. If you bought in at the 2022 sort of peak, the last time natural gas was quite hot, right? The last time you had all the sort of demand in the market, you saw the price spike up. Well, you basically made no gains in Tourmaline, and you've made over 100% in Peyto. And over the last couple of years, Tourmaline has really been focused on investing against the cycle. As the sort of natural gas market cooled right off, as you saw a lot of bearishness in the market, these guys bought assets on assets. They managed to go out there, invest in new infrastructure to just acquire as much as they could and basically make themselves as much of a scale player as possible. And they've been very upfront about that. There was very much a focus on them building scale and acquiring stuff counter cycle. Peyto, on the other hand, focused on efficiency. They focus on how they can make themselves the most survivable, the most efficient, return the best amount of capital with the least amount of spend. If you're talking about a return on investment, these guys are crazy. And these guys really are an efficient company. They are just very focused on that, and they've executed very well. Obviously, shareholders have been very much rewarded over the last 3 years. If I zoom out a little bit more and we talk about what they've done since that 2020 timeframe, and this is, we're talking about the sort of end of 2020, you see that Tourmaline's up about 350, right? 340 something, and Peyto's up about 900. Crazy return. And if I zoom that out and I try to find like right about the bottom here, right? We're talking the bottom in the sort of early spring of 2020, then you see a little bit more of a balanced picture. Tourmaline then up to 500+% up, and Peyto still up about 900. And now if I go any distance beyond this, it's going to be quite challenging for me to give you a fair picture of the two. Because if I start to zoom out to, let's say, 2015, right? We give ourselves a decade. You see actually Tourmaline's outperforming compared to Peyto, but the total return number does not look anywhere near as attractive. If I zoom out to sort of the peak, back then, we're talking Peyto's actually down since 2014, that sort of peak last time that we had this huge amount of money flowing into the industry, with an obvious sort of movement upwards and a bottom in 2020. And if I zoom out beyond that, I try to find about the opening date, the IPO date for Tourmaline, we'll see them up about 400% for shareholders, and Peyto up 141. But to give you a sense of the different scale of these two companies, if I then zoom out to like 2000, right, you can see very different story. Because if you zoom right out to that, the story of Peyto is actually insane. So for those that have been holding this and have been willing to hold on to it for a very long period of time, they have seen a huge amount of total return. Now, obviously, we're not really dealing with those time frames. We're much more dealing with the last 5 years and the next 5-10 years. But it's important to note that because, again, people are going to show you one or several of these charts to make their argument. And depending on which one they show you, they could skew the argument in either way. I think the best thing to think about is what have they done for you over the last couple of years. And in that last couple of years, we saw a major bottom, a major bull cycle, and now we've seen sort of a period after, another sort of lower period. It's not quite as much of a bear cycle as 2020. Obviously, we're not talking a huge crash, but a more bearish cycle, a lot of investment flowing out of the industry. And now we're sort of restarting a bull cycle in the next year or so. So you see, the different ways that each of these stocks react. And I think probably more important to most investors is, what is the company doing? Where are they going from here? And what does that mean for you? And I think this is where a lot of investors start to argue about the sort of the details, the plans, whether or not things are going to work, and whether or not it's a good idea to hold either of these stocks. Now, if I scroll down here, we're on the Tourmaline Oil FinChat or I guess fiscal.ai homepage here. And these guys are a $23 billion market cap company. We're talking a PE of 17, not the best way to value a company like this. Next 12-month PE of 12. We're seeing some pretty solid margins, to be honest with you. If you're talking about free cash flow margin, you're talking an 8% free cash flow margin. You're talking about revenue growth. They've obviously had good 5-year revenue growth, not great over the last 3. We can pretty much see that in the price chart. Very much same story with diluted EPS growth. They pay out a 5.9% dividend. They do have special dividends and base dividends. So depending on exactly when you're buying the shares and what period you're holding for, you might get more of one or the other. But they have really focused down on that base dividend, growing that at maybe the expense of the special. They've also focused a lot on investing for the future, because these guys have really made it into this is a 5-year hold kind of strategy where they are going to absolutely maximize the scale and the ability to take advantage of the long-term LNG story in Canada. The story is obviously very bullish right now. We see LNG Canada Train 2 is online right now. So that's not phase 2, but it's the second train that's part of phase 1. So basically LNG Canada is running at just about its full current capacity, or somewhere near there, or they should get to that point in the relatively near future. And that is huge. That's a lot of Canada's natural gas going in that direction. We're looking at winter now. We're looking at quite a spike up in the price of NYMEX, or sort of American natural gas, over the last little while. We're back up sort of quite high. Obviously, there's been huge investments in the United States into LNG. We've got huge investments going on right now into things like AI data centers. So the demand story is very much alive for natural gas in North America, be it for the LNG, be it for the data centers, or be it just for heating homes, considering we're going into winter here. There's white stuff on the ground outside as I film this, so it really does feel like winter is here, and that is a great time for natural gas prices. Best thing is, we've seen really low natural gas prices over the last little while. We even saw drops in the earnings report from Tourmaline last week with the natural gas price so low. A lot of other companies have been struggling. The price of oil is also very low, obviously very much interconnected. And so that has been a drag on these businesses. So everything is basically short-term bearish, long-term bullish. Tourmaline is trying to play to scale and to sort of have more torque to that upside. Now, that does mean that they maybe have a little more exposure to the downside, but hey, if you're willing to hold for a couple of years, you could see another one of those periods like after 2020 when you see hundreds of percent, right? We could look at a 500% move in the next couple of years. Is that completely unreasonable? No, right? Do I know exactly what's going to happen? Can you bet the farm on a commodity? Should you do that? No. Obviously not, but they have put themselves in position to be a long-term winner. They've also put themselves in position to be safe from acquisition, which if you were a NuVista shareholder, which lots of us were, you have noticed that actually the Montney is not safe from the exploration of bigger American firms that are looking to put their capital somewhere. And a younger shale play like the Montney is very much of interest to those American firms. Tourmaline is a little bit more out of reach. We're talking 23 billion Canadian dollars, but not completely. It is not out of the realm of possibility that somebody tries to buy them. It's just much, much less likely than a smaller player. So you do have that risk of maybe the longer term return isn't there if somebody buys them and doesn't operate the assets or doesn't have the same mix of high quality assets that they do. Obviously, a lot of that has been happening in the energy space. If I show you the exact same page for Peyto here, their strategy is quite different. They are very much focused on being as efficient as possible. They are laser focused on the Alberta Deep Basin. They are just basically trying to exploit their major source of outperformance. It's just the fact that these guys can basically produce natural gas at a huge profit, no matter the price. It does not matter to them. And they will return a huge amount of money to shareholders. We're talking over a 6% dividend yield with a safe payout ratio. We're talking significant revenue growth over the last 5 years with very minimal revenue growth over the 3-year. But if you then look at the EPS chart, it's much healthier looking than the one we just saw with Tourmaline, right? Where you have that 27% diluted EPS over the 5-year, and it's only a negative 0.7 over the 3-year. Valuation is also much cheaper on a price to earnings basis because we're talking about more of currently, we're talking about 12. Future, we're talking about 8. And that's with a price target of $21.86, which is up a little bit. We're talking about a free cash flow margin here, talking 28%. Right? So it's a very different story here. These guys are very much focused on how can we return shareholder capital now. And so they've been a much better, bigger out producer in the last little while. They've outperformed. They've produced a lot more free cash flow. A lot of shareholders have loved them for that. So here's where we have the dilemma, right? We have one company that is like razor thin waste. I think that's probably the best word, right? They have very little stuff that they're doing that is wrong, right? Peyto is an excellent operator. Big fan of the company. I've been a big fan of the dividend receiving it, right? I'm happy to hold on to my shares. Now, you can't argue that they haven't already seen a lot of price appreciation, right? In contrast with somebody like Tourmaline, but it seems well deserved. If you look at those ratios, right, we're talking about like a 10 price to free cash flow next year. That's not bad, right? We're talking about a free cash flow margin of 28%. That's huge. That's a lot of money. And if you're just looking at some very consistent metrics here, like you're going to be happy with Peyto, right? The one challenge I might see owning that stock is the fact that it might get bought out. It's a reason why it's not become such a huge investment for me. And I have a challenge with the idea of these guys not leveraging the future of natural gas, because I'm a bull on natural gas in Canada. I think that becoming a major producer, producing as much as possible, having as much reserves as possible right now makes sense, because I think in the next 5 years, you're going to see a huge amount of money going into this industry. We're already seeing investments into the infrastructure. You're going to see the producers benefit from that in the long run. It's going to be a source of huge profits. I think Peyto is going to continue to outperform. I think they're going to continue to be a great stock to hold. I think they're going to provide a great dividend. And I think they're probably a safer play. They're less exposed to the commodity risk that Tourmaline is, but they might not see the same share price appreciation. If you're looking to hold them for something like a dividend payer in your RSP or your TFSA, awesome stock. If you're looking to hold them because you want exposure to natural gas, but you do not believe in this gigantic long-term bull trend that folks like me have been talking about, then these guys are probably the obvious pick because they are much safer to hold. On the other side, obviously, Tourmaline is very much exposed to that. They're trying to be as torqued to that as possible. And so I think if you're holding them, it's because you believe in that story. And so that's really the divide here. I think if you think the price of natural gas is appreciating a huge amount over the next little while, you're going to see a lot more gains from larger volume. You're going to buy Tourmaline. If you think that instead the best pick is just to get that best free cash flow yield, find the most ruthlessly efficient company, and just continue to sit there and watch your share price continue to grow. Or of course, if you've already built up a great position and you're happy to hold it, then obviously Peyto is a great stock. And I do think both of them are worthwhile buys right now. I think Tourmaline is for that longer term investor who believes in that longer term story, who believes that natural gas prices are going up. I think Peyto is for an investor who wants the free cash flow, who's less focused on that 5-year long-term return, and who wants to take advantage of the massive outperformance these guys have been able to produce over the last couple of years. I think that's an easier pick. And obviously, we don't know exactly what the future holds, right? Again, I own both for these reasons. I own Tourmaline because I think there's going to be this big bull run in Canadian natural gas. I think there's going to be a lot of money flowing into it. I think we're going to see a boost in investment. And I think basically everything is looking up to them compared to where it was 2-3 years ago. Peyto, on the other hand, I own because I want to generate income in my portfolio. I'm a dividend growth investor. I want that dividend. It's awesome. And obviously the company is growing. The company is absolutely fantastic, right? They are, again, we're talking about like razor thin waste at that company. Like they're operating at a level that very few can. And so I believe that if there are opportunities to outperform, they're going to continue to take them. Does that mean that they're necessarily going to see the same kind of 500% over a short period of time that you could see with the Tourmaline? No. But does that mean that they're probably going to be an awesome hold long run? And if you can hold on to them like folks did back in the 2000s, then maybe you could see another 26,000% gain. Maybe, right? These guys have clearly shown that they can do it, and they've been doing it for decades. So those are my thoughts on these two shares, stocks. That's what I think about basically the opportunity for both of them. And if you have one or the other that you are picking, if you are, you're picking an ARC or somebody who's just sort of watching this fight from the sidelines and saying, hey, we're awesome too, please do let me know in the comments below. As always, if you like this video, you like what we do here on the channel, please do like it. If you like covering these Canadian topics, talking about these kind of stories, please do subscribe. And I hope I see you in the next one.